What is that trying to tell us anyway?
Well, the April contract in Lean Hogs has been a bit of a dud here over the last several weeks, and as you'd mentioned, those deferreds continue to look really strong. Last week, it looked like we were going to get a double top in that June contract up near 122. We sold off pretty hard in the final 3 days of last week's trade, but rebounding very nicely to start today's trade, which keeps the bulls in control of the technical landscape. We get out above resistance at 122, that puts us back into uncharted territory, which could potentially just take us even higher with momentum traders piling on board at new contract highs. Now, as far as the cattle complex go, we're pretty optimistic there as well. Last Wednesday was a little bit of a caution flag for us. We sold off pretty good, but we're able to stabilize in the back half of the week. And now we're able to recover some early morning losses, which is encouraging. But right at our pivot point for that April live cattle contract near 140.5 to 141, if we can get back out above here with some conviction, I wouldn't be surprised to see the market gravitate towards that gap from February 24th. That comes in closer to 144.5.
So what about on the feeder cattle market? Where do you see support there?
Feeder cattle, our pivot pocket was 162 in that April contract. We're obviously fizzling out a little bit today, which is to be expected with the grain market trading sharply higher. But as mentioned in the grain segment, that corn market we've seen up one day, down the next. So if corn does back off the top end of this recent trading range, we wouldn't be surprised to see that offer feeder cattle some momentum here in the near future. There is a bullish seasonal for October feeder cattle that starts this week too and lasts through April 8th. So there is some seasonal strength that usually comes into the market this time of year. Obviously, a lot of other catalysts at play, so buckle up. It'll be a good one.